Holy smokes, guys, we just got three big earnings here after the bell here today. Baidu, Pinterest, Nvidia, they just came out. I want to talk to you guys about all the numbers they reported. By the way, pay attention to Financial Education 2 channel tonight. I got a video coming on the Starbucks of China that is going IPO tomorrow called Luckin Coffee. So I'm going to kind of talk about that one in depth on the channel tonight. So make sure you pay attention to that if you care about it, okay? So let's go ahead and talk here about these stocks first off and how they're reacting. Baidu's are down around 9% after hours, taking a big hit there on that one. We're going to pull up a 5-year chart of Baidu. You guys might be, your mind might be blown by that chart, okay? Pinterest down over 16% after hours. That one just went IPO very recently. I think it was just a few weeks ago, maybe a month ago that one went IPO. Down over 16% after hours. Nvidia, very good sign. That one is responding positively after hours, up about 5.5%. And Nvidia can affect a lot of stocks out there. So anytime Nvidia moves down a lot or up a lot, it can affect a lot of stocks for better or for worse, okay? First one up here, let's get into Pinterest. Obviously, that's the one taking the worst hit, down over 16% after hours. They reported a loss of 32 cents a share. That was versus 11 cents were expected, so a massively bigger loss than what a lot of folks were expecting out there. Obviously, that's a bad sign overall. You never want to see a loss that substantial of a miss there per share. Revenue came in at 201 million versus 200 million was expected, so a very slight beat on revenue there. The company provided revenue guidance for its full year 2019 of 1.06 billion and 1.08 billion. It would be the first time Pinterest generates at least $1 billion in revenue, okay? Pinterest reported 291 million global monthly active users for the quarter, a 22% increase from the same period last year. That is a good sign, and we'll give them that. When it had a 239 million monthly active users, the company grew global average revenue per user, the ARPU, 26%. A lot of these same metrics you're going to hear from, Snapchat or Facebook and companies like that in the social space. They grew that 26% from the same period last year, up 58 cents in Q1 of 2018 to 73 cents in Q1 2019. So that's obviously a very good sign that the average revenue per user is going up, okay? Pinterest experienced the most growth in its international markets compared to the US. International revenue rose 107%, so a huge increase there year over year, but it jumped from basically 7 million in the same quarter last year to 15 million. So although the number seems insane, that's a percent, 107% international revenue growth, the numbers are teeny, like 7 million, 15 million. It's like nothing for a big public company like this, okay? By comparison, revenue in the US rose 51%, but obviously that's a much bigger base, up from 124 million in the same quarter to 187 million in this most recent quarter. International monthly active users saw significant growth, up from 160 million in Q1 of 2018 to 206 million in Q1 2019, a 29% increase. US monthly active users rose just 6% during that same time frame to 85 million there, okay? So Pinterest, overall, my question is why? Why would you want to own Pinterest stock? I will never understand why somebody would want to own Pinterest stock. You're talking about a company that loses a ton of money, okay, and isn't expected to probably be profitable anytime soon. So essentially, you're buying a speculative company. Is Pinterest really the best speculative company you could buy in the stock market? I can probably think of 10 speculative companies off the top of my head that are 1,000 times more interesting than Pinterest overall. I can literally not understand why somebody would buy Pinterest stock. You're buying a spec stock, and there's so many, in my personal opinion, so many better spec stocks out there. But anyways, that's the numbers around Pinterest, okay? Let me know your opinion on Pinterest in the comments, all right? Baidu, which is sometimes branded as the Google of China, they did miss by about 16 cents. Q1 non-GAAP EPS came in at 41 cents. That was a miss of 16 cents. GAAP EPS of 15 cents, missed by 2 cents. So the miss on the non-GAAP was actually much bigger than the GAAP. So actually that's a good sign, okay? Revenue came in at 3.59 billion. That was up 7.8% year over year, and that was in line with what a lot of folks expected, okay? So Baidu is still a growth company. It's just not a double-digit growth company, essentially, okay? Now, Baidu did have some light results around some organic user growth metrics. So revenue rose 15%, as we spoke about, to 24.12 billion yuan. Excluding revenues from divested businesses, they rose 21%. Okay, that's very interesting there. But operating costs rose 53%, and the company swung to an operating loss of 4.6 million yuan on a GAAP basis. However, on a non-GAAP operating income fell 93% to 401,000 yuan. Net income fell 80% to 967 yuan from 4.82 billion yuan in the same quarter last year. Daily active users of Baidu's app rose 28%, very positive sign there, to 174 million. Daily active users for Hakkasan rose 768% from last year. That's an crazy rise, okay? And 16% from last quarter to 22 million. And the installed base for the company's voice assistant rose 279% year over year to 275 million, with monthly voice queries rising 817%. Okay, that's a massive rise in the voice assistant there. The company authorized a new $1 billion share buyback effective until July 1st of 2020. They also lost their VP in their search business, okay? The company guided below consensus as far as Q2 revenues. They're supposed to come in at 25.1 billion to 26.6 billion yuan there, and I think that's a big part on why the stock's actually down after hours. Now, interesting thing about Baidu, just pull up a 5-year chart of the stock and it's just gonna make you sad, okay? Baidu is a stock that is literally down over the past 5 years, despite being a company that has grown quite substantially over the past 5 years. But literally the stock, you go back 5 years ago, this was $170 something stock. It's tomorrow going to be in the 140s. So it's been a nothing stock essentially for years now. Now, I will say with Baidu, it's probably, if I'm looking at it, let's say I was forced to sell off my Alibaba shares, and let's say I had to use that money to buy another Chinese stock tomorrow. The one I would probably buy at the end of the day is probably Baidu, in my personal opinion, okay? If we look at Baidu, you are getting this one for a pretty cheap valuation, and it is still a growing company. Is it growing super fast? And no, most of its businesses aren't, as an overall, kind of metric, but it is a company that's at a pretty fair PE now, a forward PE under 15. And the fact is, it is still a growing company. So I will say, Baidu is very interesting at the particular levels it will probably be trading at tomorrow. Obviously, with the tariff situation, we don't know if the Chinese economy could get worse. That could obviously hurt Baidu more. A lot of their money comes from advertising revenues. If businesses are hurt, maybe they pull back strings a little bit. So it is something to kind of worry about there. But if I'm looking at it, if I had to sell Baba, I would buy Baidu. That's the only other Chinese stock that really interests me a lot. Tencent's always been interesting as well, but Baidu is probably the one I would stick my money in, okay? Nvidia. So Nvidia, this was always an important one, not just because people own it, but because it affects a lot of other stocks in the market. Nvidia beat by 7 cents. They beat on revenues. Nvidia Q1 non-GAAP EPS came in at 88 cents. That was a beat of 7 cents. GAAP EPS of 64 cents, also beat by 7 cents. Revenues came in at 2.22 billion. That is down nearly 31% year over year, guys. That's a massive decline year over year. Nvidia's business model has just been hurt substantially, and that's how you get a stock that was, back in October, Nvidia was like $300 a share, or approaching $300 a share. And now it's at $150, $160 a share. That's how you get a decline like that when you see revenues decline like that, okay? But they did beat by 20 million, so that is a positive there. Now, as far as their guidance, it was in line for Q2. Guidance of 2.5 billion to 2.6 billion is in line. The estimate was around 2.53. They're expecting gross margins to be between 59.2% and 59.5%. That's a very positive thing there, okay? Those are very strong gross margins. Revenue breakdown, as far as gaming, that came in just over $1 billion there. As far as visualization, that came in at 266 million. Data center came in at 634 million there. Auto came in at 166 million. OEM and other came in at 99 million there. Non-GAAP gross margin came in at 59% versus 58.9% was expected. Operating expenses came in at 753 million compared to 760. So pretty much everything was in line there with Nvidia. Nothing out of the ordinary. On the positive side, on the negative side, that's probably why the stock is up 5-6% after hours right now. It's just the fact that people are relieved that the quarter wasn't a disaster or something like that. It just was, a clean quarter. Let's just call it what it is, okay? Now, if you look at Nvidia, it's kind of like, short term, it's rough for this company. Bottom line, it's rough for this company in the short term. It's seeing revenues down 30+% year over year. It's awful. That's awful. But the long-term story with Nvidia stock is still intact, and that's the positive with this company. And so you look at Nvidia right now, they're at roughly a 22 forward PE. And once again, short term, it's not a stock that's probably going to do great short term as far as their numbers go. But when you look at the long-term story with Nvidia, it's an amazing company doing amazing things. And if you look at the long-term bullish thesis around Nvidia, it's still all pretty much intact. It's just a company that's honestly hurt right now because of the Chinese slowdown, data center slowdown, gaming slowdown is pretty much, and obviously the crypto market, what happened in the crypto market over the past year has hurt those sides of their numbers. So pretty much anything that could go bad has pretty much gone bad for Nvidia over the past year. However, long-term story still intact, still a great company, still very well run, still loaded with cash, still very profitable, even in bad times like right now. Still a company that's very profitable. So, I love that company. I've always wanted to buy it. I never have. Maybe I get to do it at some point in time, guys. Anyways, let me know your opinion on any of the stocks we discussed here in today's video. Once again, the Luckin Coffee, that's supposed to be going public tomorrow. We're going to cover that on Financial Education 2 tonight, so be sure to check that out. Thank you for watching. Have a great day.